Welcome back. Welcome to the 48th episode of Coffee with Krav. I'm Mark Kravietz, and on this show, I have conversations with different people from different walks of life where I'm looking to educate, entertain, and have some fun. Artificial intelligence has quickly become the most talked about technology in the world. But beyond the headlines and the hype, what does AI really mean to investors, to entrepreneurs, to business owners, to people in general? My guest today, Brian Blongastainer, believes AI is more than technology story. It's an economic transformation from chips to data centers to power generators and business applications. We'll discuss where the opportunities are emerging, where the risks lie, and what futures may hold. So let's get started. Let me read Brian's bio. Brian is a global investment strategist leading Newton's thematic investment business and guiding the messaging and positioning of infrastructure, international equity, and global equity income strategies. As a member of the investment team, Brian works collaboratively with investors to identify, develop, implement themes into the firm's multi-dimensional research process. Brian joined Newton back in September of 2021. At the time, he was a senior research analyst at Mellon Investment Corp and the Boston Company Asset Management, both BNY affiliate companies. Brian, welcome to Coffee with Krav.
Mark, good morning. Thank you so much. This is great. I'm very excited to be here today.
Well, good. Excellent. So let's go back before we go forward. So if we go back and we look at like the 90s to 2000, that brought us the internet. And that was obviously major change to everybody in the country and the world. And then the smartphone was the next major situation that pulled us through up until 2007 and beyond. And then 2023, there was another inflection point. And I'd like you to talk about that inflection point back in 2023.
Yeah, absolutely. So we think that AI is really that third epoch of technology. So you had the personal computer, then you had the mobile phone, made seismic changes in the way that the world operates, the way that humans interact, the way that we do our jobs on a daily basis. But then in November, 2022, ChatGPT is launched to the general public. So this is when the world really changed in 2023, as you mentioned. So for the first time in history, what ChatGPT allowed is for people that didn't have computer science or data programming degrees or capabilities to interact with an extremely advanced technology. So you or I who work in finance, we can use artificial intelligence tools to do amazing things, and we can do it with natural language. So what that means is we can just do it with our voice, we can do it with typing, and again, we don't have to do it with coding. And so this is really what changed the world. And we are extremely excited about artificial intelligence, what the capabilities are, how it's going to change the world, how it's going to improve healthcare, how it's going to augment human life. And that was the real differentiator, is bringing this advanced technology, which has been around for decades, but bringing it to the hands of the everyday human to interact with.
And I wish it was around when I was in college. I was a computer major, and I was doing Fortran and COBOL and BASIC and all these languages. It would have made things so much easier. Can you talk about the pull and push of AI? So you have like traditional AI versus agentic AI. So can you tell the audience what the differences are?
Yeah, absolutely. So, I think it's important to kind of look at what AI is and what the daily uses are, and then we can kind of go from there. So what we're seeing now is a transition from assistance to action. So that's exactly what you're talking about with traditional AI versus agentic AI. So if you think of assistance, so on a daily basis, we start to write, text, and our texts now start to auto-populate, or our emails start to auto-populate. And this is really the basics of artificial intelligence. And for math majors, this is your y equals mx plus b. If I keep putting in these independent variables, this model is smart enough to assist me to know what pattern recognition is, and to then go ahead and complete my sentence for me. So that's kind of traditional AI, or if you are using a chatbot and you ask it a question, it's just going to search its database and it's going to answer that question for you. We don't need humans to do that. But what agentic AI is this is when the artificial intelligence capability is now taking action for you. So you're asking it to do something for you. So a few examples of this kind of in daily life are now some of these travel companies are starting to come out with tools and capabilities where can you book this trip for me? Can you fill out this or draft an email for me based on all of the information you can find about my clients within my email and our prior interactions? So this is when it starts to take action. The perfect example of this is autonomous driving. So smart cars. So what agentic AI really is kind of that if then, to put it back in math terms, it's that if then statement. If I ask you to do this, then do this. If this occurs, then react in this way. So if I'm driving and somebody starts to cross the street, then take this action. And all of these agents in the car are then making decisions for you. So it's about taking action. So it's again from assistance, which again we're all using on a daily basis, to action where it's doing things for you. And this is where the opportunity set gets really exciting. This is when you have people at enterprises starting to adopt it and starting to use it on a much broader and more powerful capability set. And we can talk about all of those.
Yeah, I do want to
Yeah.
get into that.
Yeah.
You know, just on the driving side, I don't know if you've ever taken a Waymo.
Yeah.
I was in California visiting my daughter, Santa Monica, and we ordered a Waymo. Came, we got in, uh, asked what type of music we wanted to listen to, and drove us to where we wanted to go. It was pretty interesting.
Yeah. The future is here. The future is here for sure.
Yeah, yeah. If you ever get a chance, have you done it?
So I haven't done it. So I've been to Texas a few times, and I've taken a lot of pictures of them when I've been meeting with clients. I've seen them in California, but haven't gotten in one yet. Still makes me a little nervous, but
Yeah,
I
a little
will
chicken
make
there.
sure.
Huh?
Yeah,
Okay, all right.
yeah. I'll be in California in a few weeks. I'll do it. I'll do it.
Yeah. Try it. Yeah, I mean, you really don't see accidents happen. You know, you don't believe me. If there was major accidents with Waymo or the Tesla or anything like that, it would be all over the papers, and you don't really see that.
I mean, this is a perfect proof point of AI. I mean, this is, again, the promise of AI. It's going to make our lives, it's going to augment human life. And exactly that. I mean, the accident rate of these cars is significantly lower
Right.
than accident rates of humans. So, just a quick story. So, I have a 16-year-old daughter, and she took out a mailbox yesterday. So, that was part of my day. She drove through a mailbox, and I don't think the Waymo would have driven through that mailbox. So,
No, it was the mailbox is full. What was it
that's
doing
right.
there?
Yeah, exactly.
You
Exactly.
can't have a mailbox over
Yeah.
there. Oh God. All right. Thank God I'm past those days.
Yeah.
So back to, according to your research, there are three waves of this AI cycle. So let's start with the first one, semiconductors and infrastructure. Is this wave going to last a long time? And talk a little bit about this first wave.
Yeah, of course. So I mean, if we think back to where the markets have gone since you mentioned 2023 and the launch of ChatGPT. So in 2023, it was a very narrow market rally. It was the Mag 7, it was the hyperscalers, it was tech companies. So again, AI took the world by storm. It got in everybody's imaginations of this is what AI can do. This is so powerful and so awesome. But what it came down to is who were the companies that had the hundreds of millions of dollars to spend to buy these semiconductors and then who the semiconductor companies were the ones that were winning. So starting in 2023, semiconductors stocks have done extremely well. And we do believe that they'll continue to win because of what you mentioned, those three waves of this investment life cycle that we think are self-reinforcing. It's kind of a network effect. And we think that as AI continues to get implemented and use cases continue to rise, especially on the enterprise side, we will see continuous demand for semiconductors. This year, first half of the year, semiconductors were up 60%. Again, if you didn't own semiconductor stocks, you probably underperformed. So yes, we think semiconductors are going to continue to win because we think AI and the spending within AI will continue to drive this demand. And again, we are now, 3 years ago, 2023, we were looking at $300 billion in CapEx from the hyperscalers, and projections are in 1 year, and projections are this is going to go to $1 trillion in 1 year. So this is AI is an extremely competitive area. All of these large tech companies want to win. It's a global race, and we're going to see trillions of dollars being spent over the next few years. And we always talk as investors, well, follow that capital. Where is that capital going? That capital is going first and foremost into semiconductors.
All right. So let's go over to the wave two.
Yeah.
Wave two is the power generation, right? It seems like we don't have enough power to help these hyperscalers to generate, you and I using ChatGPT or whatever companies that we're using. So is there enough power? Is there enough, power to supply this demand, or are we way behind?
Yeah, so in the US, there's not enough power to power this. And so the reason for this is in the United States, power demand was flat for 20 years. So essentially, power demand needed to grow with population growth, so 2%. And then what we were able to do is put a lot of efficiencies into our power grids, into our power system. That offset the increase in demand by the efficiencies. And so there was no growth in power demand. There was no growth really in pricing for utilities. I mean, some growth. But what's happening now is these AI data centers require 7x to 10x the power of a traditional data center. And the reason for this is what's called inferencing. And what inferencing is, every time I ask AI to do something for me, whether it's ChatGPT or Gemini or Grok or whoever I'm using, every time I ask it to do something for me, that's going to a data center and requiring a significant amount of data. It's called tokens. And now that enterprises are starting to adopt AI, they're starting to use more tokens and more power. But again, because we hadn't grown our power supply for 2 decades, we are behind. So now we need more power. So what this did is, again, from a market standpoint, 2023, very narrow. 2024, the market starts to broaden out in these power companies. So utility companies, nuclear power companies, uranium companies, all of these companies really start to provide leadership in the market in 2024. That's when we started to see that power trade and the AI trade really start to broaden out. And again, this is global, right? So in 2024, it was all about US utilities, and then 2025 was all about Western European utilities, and European markets started to do well because everybody needs to win at AI. And we're I'm sure today about the regulatory environment and the headwinds and the headlines, but power, we believe, is really that second wave. So if we're going to spend $1 trillion on building out data centers and buying semiconductors, well, now we need the power, and we need more oil, we need more gas, we need more battery storage, we need more nuclear, we need more small modular nuclear reactors. We need all of it. We need more geothermal energy, renewable energy, you name it. We need more of it. And that's really where we are now. That's really where the bottleneck is, especially in the United States, in terms of growing out our data centers and our AI capabilities.
What I'm reading about and learning is that China has tremendous amount of power generation there. I guess they don't need the same kind of approval that you need in the United States. So are we behind them? Are we way behind them? Can we ever catch up?
So we are behind them. That gap continues to kind of widen a bit. So China is continuously building new nuclear reactors. They are continuously implementing and installing a significant amount of renewable power generation. China controls the supply chain for parts for renewable energy, for solar panels, etc. They control rare earth metals that are going into these solar panels and others. So yes, China is ahead. The regulatory environment in China is less strict than the US. And that's where we are right now, right? And that's what we're seeing in the news, what we're seeing everywhere is that there's a lot of regulatory concerns here in the United States around the growth of power and the impact it could have on retail electricity prices. So right now, the answer is yes, we are falling behind China, and that is a concern because we think AI is such a powerful technological advancement that you don't want to fall behind due to the regulatory environment or the lack of resources. So we do need to make sure that we kind of answer these questions as quickly as possible and then increase our power supply capabilities.
We can talk about some controversial things, but maybe
Yeah, please.
You want me to?
Yeah, so I've given this presentation, we can go down dark paths. Sometimes we don't.
Yeah, just
Happy to
some of the things that I've read or heard. I don't know what's true, what's not. China is out there putting out negative information into the social media structure of the United States to say how bad it is. You don't want this power situation in your home or around or close to you because of A, B, C, and D. And it's kind of coming from China because they have an incentive to make sure that we don't have this power being created. Is that something that is true? Is that something that, is out there, or is that just, some controversy?
Yeah, so I mean, I don't think it's controversy. I mean, I think the risk to the power grid, the power system, is that retail power prices increase. So if we're all competing for that same capacity of power, and then the hyperscalers are willing to spend more money to access that than a retail customer is, then the risk is that the power company, the utility company, would provide those resources to the highest bidder. However, U.S. utility companies are highly regulated. They can only charge so much, and they can't just take away power from consumers. So that's where we are now. Is we need to, the message today from all of the leaders at the state level, because this is where currently it's being regulated, is you need to bring your own power. Hyperscaler, if you want to build a data center in our state, bring your own power. And what bring your own power means is those small modular reactors where you're going to build it and attach it to your data center. It means renewables, solar, wind, etc. But it also means these independent power producers that do have access to nuclear power and have excess nuclear power could then help you to resource these data centers. So it's not no, you can't build a data center. It's you can build a data center, but you can't take the power from the grid that's being allocated to our end clients. And so that's kind of where the difference is. And because China does have excess power supply, we have, a deficit. We just need to make sure that we kind of all hands on deck to make sure that we can meet the power demands. But I think some of the concerns are definitely factual, and the term is called NIMBYism, right? Not in my backyard. So yeah, go ahead, build a data center. Just don't do it in my backyard because I don't want to have to pay higher electricity prices.
Okay. Wave three. Wave three is software adoption. This is a huge area that has gotten a lot of press. Where are we on this adoption?
Yeah, so we have now entered wave three. We would define 2026 as wave three. So what wave three is, we have the chips, we have the power. So now we're going to implement and adopt artificial intelligence everywhere. So we talk about this as ubiquitous AI, so AI everywhere. And we talk about this as physical AI. So this is everything that we have, touch, feel, is going to have AI capabilities in it. So our smartphones are going to have AI capabilities. Our houses are going to be AI enabled, whether that's our heating systems, whether that's our, security systems, everything's going to have AI built into it. But this is also warehouses, automation is going to have, humanoid robots or just robots in general that are able to run the manufacturing facilities as well. And so that's where we are. And then all of the software that we use is going to have AI capabilities within that as well. So we think we've entered wave three. We think the enterprise adoption of AI is very low. We think that companies are starting to implement it, but they've yet to train their employees on how to utilize it. So the return on investment for many companies isn't there yet, but we think it will be. So if you think of Copilot, right? So Microsoft Copilot is kind of the first software that I think most people may have access to. So again, I'm a thematic or an investment strategist, and I work a lot with clients, and they ask a lot of questions about, our products, our strategies. And so a lot of times I'll just go into my Microsoft, into Teams, and go into Copilot, and I'll say, hey, listen, this is the question that they're asking. What is our outlook on this? And it searches all of my emails, it searches all of my Teams correspondence, all of the posts from our clients or from our internal employees, and it's able to come up with answers for me that are kind of client ready. On the advisor side, a lot of advisors are starting to, tape their conversations with their clients, and then it summarizes those conversations for you. Here's the key takeaways for me. Here's the key takeaways for my client. Here's the follow-up, agenda and items. Maybe it'll schedule another call for you, draft an email for you. But this is kind of that software and enterprise adoption. This is that physical AI starting to take hold. And this is why we're still bullish on AI, is that once you start to implement it everywhere, it's just going to require, stronger chips that are smarter and faster, and over time more efficient. But then again, every time we utilize AI, it's requiring more power from these data centers, and it's just going to be that continuous cycle.
Well, with that in mind, this year we saw what they call the Sescopolis, where we saw the SaaS companies, the software companies as service, get annihilated, fall significantly. Was that an overreaction?
So this is the beauty of our company. So we're active stock pickers, right? And so our job is to determine, which of these companies is an overreaction and which of them aren't. So, I mean, there are parts of the market where the negative impact of AI is going to be huge. But there are other parts of the market where, if a company that is a software company can implement these tools and have some sort of moat, then they could really benefit. And so that's what we're trying to figure out now, is an invest in the companies that have been oversold, essentially. But the reality is, these AI tools, a lot of it, you can build your own software. You can build your own agents, right? And multi-agents and agents of agents and agents that just work together, work autonomously to do the tasks that some software currently does. And that's where the risk is. And so, every few months, you'll see Claude comes out with another tool for maybe within legal or research, or in taxes. And then that throws those software SaaS companies, into the kind of bullseye of AI disruption. And so that's kind of what we're seeing in 2026. So it's a great opportunity for active investors.
Okay. And what does the average investor fail to understand about the economics behind AI?
Yeah, so I mean, I think that we're in the early stages of the return on investment of artificial intelligence. So companies need to start to prove out that the billions of dollars they're investing in AI have an ROI. And so we think that companies, if they implement their AI capabilities correctly, there's significant opportunities. For some, it's to drive additional revenue growth. For some, it's the ability to be more efficient and cut costs and drive margins. And for some, it's to be more efficient and potentially have less employees. So a company like United Healthcare, so healthcare company that I think interacts with 3 million people a day, they're able to now spend $1 to $2 billion on AI capabilities over the next 2 years. And they already think that they have a 12 to 18 month payback on that by the ability to reduce friction, to answer questions quicker, to have less call interactions. So there's a perfect example. A lot of companies like Walmart or Amazon, who are selling and have large inventories, are able to implement AI capabilities for inventory management, for predictive analytics, to determine what is going to sell. It always amazes me when I go on Amazon and I'm like, I need this. And they're like, okay, we'll have it to you in 3 hours, because they're predicting what people need and what people will buy. And that's how they're stocking their local warehouses. It's amazing. But that's all AI, because they know kind of my age, my demographic, where I live, my, what I need. They know I need shaving cream every so often, right? So these predictive analytics are able to help with the inventory management, but they're also able to help with kind of the click-through rates and the ability to have people, finish a purchase. Same thing with the Instagrams of the world and the influencers and their ability to target you very specifically based on your behavior and your demographics to drive revenues. So we think that there's significant opportunities for the positive return on investment for companies. Some use cases are much easier than others to talk through and understand. And then the enterprise's adoption and the necessity to train their employees on how best to utilize AI to get those returns is kind of where we are now. Because AI is new to everybody.
Well, one of the words that I hear all the time about AI is disruption, right? We hear, they talk about AI and it's going to disrupt this industry, disruption. So which industries do you think are most vulnerable to disruption, let's say over the next 5 years?
Yeah. So, I mean, the first one, the easiest one is the call centers, right? So, I mean, call centers, we don't need as many people answering phone calls, but that's kind of the easy one. But the legal industry, right? So you have a lot of, fees for legal to look up, use cases, to look up legal history. And now you have AI can do that part of it for you. Marketing and the marketing or advertising, like you can have AI create and generate videos and marketing content for you. So that's another area that's going to be significantly disrupted. The tax industry is another area that's going to be significantly disrupted. So there's a lot of those types of industries, the insurance industry, where AI has great capabilities in insurance to make sure that we are pricing our insurance products appropriately for clients and customers based on their, geographic location, their risks, their lifestyle. But also now these AI tools allow me to better cross as a consumer to better look at the pricing of each of these insurance tools. And maybe I could find a more, cheaper insurance product that's giving me the same coverage. So then it puts pricing pressure on the insurance companies. So a lot. Yeah.
We'll with that in mind, is AI going to be replacing people, or does it make people more productive or dramatically more productive? And there might be two different answers there.
Yeah.
Yes and no.
So yes and no. So yes, it's going to definitely remove people from specific jobs. So any job that is really high to human error and prone to human errors, kind of back office data analysis, like those types of jobs can definitely be automated. But if you look, the World Economic Forum believes that this is going to be a net positive for jobs. So what we're seeing now is a lot of companies are laying people off, but what they're realizing is that the AI tools can't replace them and that they still need the human in the loop. They still need the human doing the job to enhance their capabilities, not to replace their capabilities. And so you're seeing a lot of these companies hire these people back. But the net should be positive for adding jobs, just like the personal computer added jobs, right? When the personal computer came out, everybody had the same reaction. Nobody's going to need workers anymore. That's not true. We do need workers. We'll need more workers. We're going to need more people that understand AI ethics, cybersecurity, coding in terms of the ability to create these agents and then monitor these agents and then have these agents work together. But the reality is you should be able to be better at your job by utilizing these AI tools. And it should allow you the capability to work on higher order tasks rather than the mundane, repeatable tasks that could be replaced with AI.
You're giving us a lot of very positive things about AI, and I love hearing that. I'll take the other side of the coin. Is what concerns you most about AI that people aren't paying enough attention to?
Yeah, I mean, I would say privacy. So privacy is a big part of this. And so in the future, is there a risk that based on my personal life, that I could be charged more money for insurance, right? So that's a risk. And again, it's still part of insurance pricing, but that's definitely a risk. Could my personal information get into the cloud and get into these models so that anybody has that information? So that's always been a risk. And so that would be a heightened risk as maybe these agents are now able to get into private data. So I think those are a few risks. And then I would just mention biases. So when these models are created, they're trained, and what they're trained on is what's called reinforced learning human feedback. So basically all these models that I've mentioned, whether it's Gemini, Grok, Claude, OpenAI, ChatGPT, they're all trained on the same historical data and information from the internet, from books, from movies, from songs. But then that reinforced learning human feedback, that's when you ask that model that you've trained or created a question and it gives you an answer and you're not happy with the answer. So you go back and you put a bias into that model, into that answer. So just be very aware anytime you're using one of these models that it could have bias, whether it was created in Silicon Valley versus Florida versus New York versus the Middle East versus the Far East. All of these models are going to have bias within them. So it's very important to always have a human in the loop, always to understand, to be able to interpret, to be able to explain exactly what the model is out.
So what you're saying is if you have very large companies, I'm not going to bring names up,
Yeah.
but if a CEO of a very major company that has one of these that you're going on to get all this information, if they have their own biases and they hired people with that certain bias, that you're going on, you're getting answers that those answers might have a little, left or right or left center, right center. They might have some kind of biases to it. So you got to be really careful with that. Would you say that you should maybe use a few of them to get a couple of different answers from a few of these different AI companies?
Yeah, so absolutely. So yes, 100%. Whoever's leading these companies will have a bias, and that could, and it shouldn't, but it could impact what the output is. This definitely happened with a very, very large mega cap tech company 3-ish years ago. You asked it to show you a picture of the Civil War. It would export that picture, and it was just factually inaccurate. And the stock really got crushed in the market because I can't trust this AI model. So yes, it's important, again, human in the loop and use multiple models. But again, don't take everything that comes out of an AI model as fact. Make sure you can interpret it and explain it.
Before I ask a couple more questions,
Yeah,
I know you sent me a presentation yesterday. Do you want to put up any of those slides, or if not, I'll continue with my questions.
Yeah, so let's just, if it's okay, we'll look at kind of 4 slides just to kind of summarize a little bit of what we
Okay.
just talked about. And just really, I think, again, I was a former high school teacher, and I think that some people are visual learners, and we want to make sure that we give that to them.
Which slide number do you want?
Let's start with 19.
Okay, let's see. All right, tell me if you can see it. Can you see it?
Not just yet. Yeah, there we go. Perfect. Yeah, so this is that kind of first wave, second wave, third wave. So we think it's an investment life cycle, and we think that wave 1 was the AI optimized hardware, its platforms, models, semiconductors, and cloud. So this is 2023 into 2024, but then we start to realize that we need power. So we need innovation across the power ecosystem. We need to generate more energy. We need to integrate it into the system. And then now we think we've entered wave 3, ubiquitous AI services. This is products that are going to have AI capabilities in them, applications, software, gaming, and advertising. But I think we can go now to your robots, your generalized intelligence.
What slide number is that?
Let's go to 14. We'll go, I think, 14, 15, 16, and then.
Okay.
So this is, again, this slide is so powerful. So this is the CapEx, so the capital expenditure towards AI from just the hyperscalers, 1, 2, 3, 4, 5, 5 companies. So in 2023, we mentioned that ChatGPT comes out in 22. You're looking at about 160 billion in CapEx. But now you can see that race is on. So essentially we're going from 160 billion to over $1 trillion in 4 years. And this is, again, such a competitive market. Everybody wants to be able to win. Everybody wants you to use their cloud, their capabilities, their AI tools. And this is really us as investors. Like, we don't really care. within the tech side, we care who wins the AI race. But for the rest of the market, we don't really care who wins the AI race. We just want to follow these trillions of dollars of investment, see where that money is going. Semiconductor companies, power companies, physical AI companies, where are they sending this capital? And on slide 15, we'll show that a little bit. So battery storage companies. So battery storage is, Bloom Energy, record full year revenue and gross margins, and their bookings were up 2.5x year over year. That's a huge number. Gas turbines. So this is another area within the power industry. Their turbines are sold out through 2030. So again, as an investor, that's great visibility into earnings growth. They can drive pricing power, expand margins. Nuclear sentiment is now back in favor. So we see that these hyperscalers are going straight to the nuclear companies to go ahead and make sure that they have power capacity. And then grid infrastructure. We need to improve the grid. We need to expand the grid. And so this is another area of structural tailwind for these utility companies, these transmission companies, these equipment companies. And so this is what really excites us about that wave too. And then just one last slide, just again, a good visual to see the many different areas of potential growth. So I mentioned that U.S. Electricity demand was flat for 20 years, and now it's going to grow twice as fast through 2030 as it has at most times in history. And you're going to see investment opportunities across new energy sources, that battery storage, off-grid power generation, nuclear, solar, wind, gas, oil, energy storage, energy transmission, and then some of the materials that are required to go ahead and build out these capabilities and this capacity. And I think that's it for slides. Just want to kind of bring it to life visually.
So let me ask you this, and maybe let's take it again. I try to look at two sides of
Please.
of the coin. There's an amazing trickle down effect taking place. Hyperscalers are spending the money to expand. They're looking to fulfill the needs and the demands. Demand is increasing, so they need more compute. Companies are building energy to fulfill the needs, and the picks and shovels of the companies, and we just looked at that, are benefiting. According to your numbers, it looks like it's going to continue to increase. But what happens if the hyperscalers pull back? I can't tell you what the reason is. There's a lot of things going on in the country, in the world. But if there's this trickle down effect and the hyperscalers, because that's what we're all depending on here with all these screens, what happens if they don't spend, they reach an apex of $1 trillion and then they go to 800 million? So if you start to see that, is there going to be a trickle down effect on all these other companies and the markets?
Yeah, absolutely. There definitely could be. So that is something that we monitor on a daily basis. So we run an infrastructure fund here. We run a power generation fund here as well. So we are very much talking about this on a daily basis. But yes, at some point, the growth, just a lot of large numbers. First and foremost, the growth rate is going to slow. So we're comfortable with that. And at some point, the CapEx, as you build it out, potentially could roll over. So that's just a part of active investing, just to make sure that you have the right valuation on these companies. And you can see in the power space over the past kind of 6 weeks, the Fed went hawkish 6 weeks ago, and there was concerns that kind of interest rates would continue to go up. They're going to raise rates, and you could see some of the steam come off some of these stocks. But again, we still think we have another, 5 to 10 years of really strong growth and investment, because we still think we're in such the early stage. Like agentic AI, generative AI, the adoption of this at the enterprise level is so low that we still think that there's significant growth ahead of us. But at some point, yes, the growth will slow. The CapEx will come down, because right now it's even getting more difficult for the hyperscalers to come up with the funding for the CapEx, and some are issuing stock to raise capital. A lot of this is off balance sheet. So something we're monitoring on a daily basis. But yes, in 5 to 10 years, we do think it's going to slow, but it's not something we're concerned about at the moment.
This is a pretty significant runway that we're looking at.
Yes.
Great. Well, Brian, you've said it all. You've said a lot. I really appreciate that. Is there anything that you want to leave the audience with? Any information? Anything that we covered? I know we covered a lot. But is there anything else that you want to leave the
Yeah, so I mean,
audience with?
yeah, sorry, a few things. I mean, I think that we are, bullish on that investment life cycle. We think we're in the early stages of the enterprise adoption. We do believe that AI is supposed to augment human life. And, we think that areas of healthcare and rare diseases are areas of
Mm.
super excitement that we really would love to see AI have a positive impact on. And then AI, again, is supposed to be able to augment human life and not be something that we're fearful of. So those would be my last parting thoughts, but I appreciate the time. This was a wonderful conversation.
Yeah, and listen, I love the positive outlook that you have there, and thank you for helping us look around the corner and think about what's going to happen next. To everybody listening, remember the future is really arrives all at once. It shows us signals, trends, ideas long before it becomes obvious. And today's conversation was chock full of these types of symbols. So thank you for joining us with Coffee with Krav. And until next time, keep learning, keep growing, keep brewing great ideas. And cheers to everybody. We'll see you next time at Coffee with Krav. Thank you.